And how do you look at factors when you're looking across asset classes? So from a total portfolio dynamic tilting, how are you using factors to inform those decisions?
I think in equity portfolios, for example, Aussie domiciled or international, we tend to just have sleeve of our portfolio targeted factors, such as value, size, I think size with quality, momentum, and in the international space, it would be minimum variance, stuff like that. But from more of a multi-asset, because these equity stylized factors don't exist through multi-asset, we more approach the factor investing through understanding diversification. Well, viewing from the factor perspective just allow us to understand diversification more. So it's important to not only look at the asset class. There's so many asset classes coming in these days, but to understand the factors that underpin the asset classes.
Yeah.
What about what's going from here? I think there's so many attention and so many innovation that's going through the factor investing. How do you see where we're going from here?
Yeah, I think, big themes within the market, not just for systematic or quantitative investors as a whole, is like, how is AI going to help and advance the process? And, I think for us, when we look at AI, there's, and machine learning and alternative data sets as a broad bucket, we see lots of opportunity, but we think there's also going to be some challenges in terms of integrating that. So AI generally is a really good solution for very low noise to high signal problems. And when we think about investment markets, it's generally a high noise, low signal problem. So you can get very spurious outcomes from AI where it's very hard to interpolate those outcomes. So we're being mindful of that, but we're looking at ways that we can incorporate it across our signals. So one of the great things is we now have access to more data than we ever have previously, and we're able to use different elements of AI. So things like natural language processing is a really key innovation for us.
From a multi-asset sort of SMA world, we just see that, we currently think that probably the Aussie market is a step behind when you compare it to both the usage and the level of research contribution. Comparing to the likes of the United States and the European states. So we think that probably in the next decade, I think the gap will continue to close. More people will start to utilize factor investing or compensated factor investing in their portfolio, to generate longer term return. And at the same time, factor investing does come with a lower fee. So, you get higher, longer term return and at a cost of a lower fee. So we believe that, the benefit are actually quite tangible.
Yeah, and we see a very similar thematic playing out. So obviously, very big uptake of factor investing within the US and also Europe. I think increasingly we're starting to see that come through domestically within Australia. One, I think it's a generational shift as people start to become more familiar with the idea of characteristics or factor-based investing or systematic investing as a whole, and being more exposed to algorithms driving certain parts of their day and how that can make an impact on the benefit of their overall life or drive those decisions. And I also think, one thing we haven't touched on, which would be really great, is, I think when we speak to a lot of investors, the key challenge they have is really around the volatility of the overall performance pattern that they're being delivered, and especially on the active return side. And so one area where factor investing or systematic investing has a really good role is in terms of being able to explicitly control for that risk. The systematic investing will play a really crucial role in limiting the number of events where investors have to actually question, are they in the right investment product or are they in the right investment solution? And that can just keep people invested for longer, and we see a real big benefit to that.
Yeah, I think the education piece, like what we're doing right now, could be very valuable, because I think, factor investing is targeted at longer term. You want to yield that positive compensated return over the longer term. Our belief, or my personal belief, is that active management is a form of mispricing. Whether it's through discounted cash flows or systematically identifies certain aspect that represents this mispricing between the intrinsic value of the company and the market value. Whether also it's qualitative way of assessment. It's about identifying that there's a mispricing between market value and intrinsic value. But I see a little bit different in the fact investing space, that is identify the factors that are compensated with a positive return over the longer term, and generally because they're risky. But the risks are compensated. So for investors that are patient and have a longer horizon, they like to achieve above market return. And I think it's that education will help them to stay invested and be able to be sort of benefit through this innovation of investing.
Yeah.